A very, very good afternoon to the Freak Network. Good morning, good evening, wherever you are, wherever you find yourself in this world of ours. Guys, we're back with another free analysis for you guys. We're going to be doing Euro USD today, the currency pair that's the most traded within the Forex market. So, firstly, fundamental picture, guys. Remember, at LBRN, we trade the bigger picture. So, always before my videos, I will give you a fundamental breakdown of what's happening with the two currencies at the present that we're analyzing. So the Eurozone is in some distress. There's rising cases of the coronavirus once again, and this is also triggering some safe haven flows into the US dollar. Coming to the US, we have the US elections coming up, which is stirring some lack of commitment towards the US dollar, but not today, guys. Not today, because we have this risk on flows within inside of the market because of all the risk that's in the world and all the rising cases in Euro and all the rising cases in the UK. And we also have the Brexit fears on the UK front. So a lot of safe haven flows being seen today, the safe havens into US dollar, into Japanese yen, and also into the Swiss franc. Also, to note on the US dollar, the FOMC have exhausted basically everything they can do to stimulate the economy once again. And I do not believe, in my perspective, that there will be any changes very soon because they said that they will not, the interest rate of the US dollar will be very close to zero for at least 3 years, right? Now, that's a very dovish statement. But that statement has been coming now for over the last 2, 3 months. So it's not new news for the market. So that's already priced in, right? So every time the monetary policy meeting or the FOMC speaks and there's nothing new that's negative, this is a big bonus for us. Okay, so technically, what do we have? So fundamentally, we know that we want to go short. We want to go long USD, short on Euro. Okay. Technically, what do we have? On a weekly time frame, guys, we have an strategy to the upside. So we have a impulse in the market. And after we have an impulse in the market, we want to see a corrective move towards at least our 38.2, but I like the 61.8 in this area because of the simple reason that we have previous market structure right over here, right? So previous market structure was broken towards the upside, and once that became uh, that broke through resistance, it now becomes support over here. Okay, so we have that on a weekly time frame. So we have our profit target as well, which is at our minus 27 of our Fibonacci taken on the rally, and then we have our targets right over here for a potential retest. We have the 38.2. I don't like it that much. We have the 50. I like that a little bit more. And we have the 61.8, which is our preferred level for this Fibonacci to play out to. Okay. Then what do we have on a daily time frame? On a daily time frame, guys, and I'll link the previous analogy or analysis of this pair as well in the video so that you guys can see that we did predict this move to come and happen last week. Okay, so if we take a trend line and we pull our trend right through here, right, because this was a structure in the market that was happening at the time. Okay, we had like this pennant structure moving up. Price was moving, slowing down after this rally in the market. We had a slowdown, but we had like this ascending channel, and we broke through the ascending channel, coming, retesting that area of support, right? Because of resistance, because this is a place of resistance, this trend line. Because the trend line is broken, it's also resistance. Okay, and then we had 1 to 3 pin bar, and we had that meltdown last Tuesday or last Thursday, and then we came back all the way up to this point, and we had that spike into the highs, and then we just ended the day bearish again. Okay, and I said last week that we are still in an area of liquidity. Okay, because we are still in an area where the market has rejected quite a few times now. This area has been rejected quite a few times, so there's still some liquidity in this place, and the potential for this wick to be filled was there, and that's exactly what we're seeing today. Now, where do we go from here? Guys, I believe that we have now broken also a head and shoulders pattern. Okay, if you guys look very, very closely, you can see that if we take our tools and we mark up the highs that we have made and we draw a neckline on, you guys can see that we made a left shoulder, head, right shoulder with our neckline that is now completely broken. So if this day would close in this matter, we have still not reached one of our levels. So the potential for more downside is definitely there. And what I would love to see is for the market to close below our neckline, come tomorrow, push a little bit to the top side, get some orders filled over here, and have a continuation towards the downside. Now, what we will be doing with our members in our lifetime membership course, and I'll link that in the description below as well, is we'll be monitoring price on lower time frames in this area, on the 1 hourly, 30 minutes, to see whether we would get a valid entry with our rules, and then we will take a very nice short towards the downside for a good risk to reward as well. So obviously our stop loss will be below the previous high, and we'll look and we'll search for something at least a 1 to 3, but we'll play it safe. Right, guys, that's it. Remember to like the video, subscribe to the channel, put that notification button on to see whenever we have new analysis coming out, and let's rock it.